I would like to start by asking you how would you describe your role at the PPI in the sense what are your main objectives and duties as a director?
Okay, so as a director I have overall responsibility for all of the work of the PPI. The PPI itself is an independent research charity and our main aim is to provide an evidence base around pensions and retirement income in the UK. At the time of the Pension Commission's reforms, I was research director at the PPI, and there my role was mainly involved in putting together the research programme and working with the researchers on all the individual research pieces as well. So I've got quite a detailed research background, as well as now looking after the organisational side at the PPI.
How was the establishment of the Pensions Commission seen in the PPI in the beginning? What were the initial thoughts around the Commission?
To be honest, they're a bit mixed. I think that one of the reasons that the PPI was set up was because there was an acknowledgement amongst the pensions industry and the wider stakeholders in that group that there was a need for some major reform in the pension system. And in fact, the PPI was set up by a kind of prior commission to the Pensions Commission called the Pension Provision Group, who then set up the PPI to look at providing evidence. So it was kind of welcome in a way. We were quite, I guess, uncertain as to what the Commission would actually look at because the terms of reference were initially very strongly focused around kind of voluntary saving versus compulsory saving, and we weren't sure that was the right question to look at. We're also, from a very parochial point of view, slightly concerned that if the Pensions Commission came in and solved all the problems in the pension system, that there wouldn't be a role for the Pensions Policy Institute going forward. So that was something we were thinking of as well. The
Politics of Pension Reform report published by the Fabian Society back in 2006, you have made a very important point to build consensus on objectives first, methods later.
Yeah.
Can you tell us a bit what that is like, to build consensus on objectives?
Yeah, so I think this goes back to a little bit that I just said about the original terms of reference for the Commission seemed quite narrow. One of the really important things that the Commission did very early on was actually, in a way, ignore their terms of reference. So they expanded and broadened what they were looking at to take in a lot of the objectives that would cover the whole of the pension system, not just should saving be voluntary or compulsory. And I think that's what I was alluding to there, in that actually before you can decide how you want to answer a question, you actually need to frame the question. And I think what the Commission did very well was it spent a long period of time not just building up consensus about what the answer should be, but actually trying to build up consensus about what the question was. And so the evidence base they put together in the first part really helped them to set out what the objective should be for the system, and then get everyone to agree about those objectives, and then it's easier to demonstrate that what they're proposing meets those objectives or not. But unless people know and agree where it is you're trying to get to, it's very hard for them to agree that what you're suggesting is the right way.
Do you agree with the view that the Pensions Commission managed to achieve a wide and solid consensus?
Yes, I think so, definitely. And I think the evidence there is that the policies that they proposed are still in place. Now, the pensions are a very long-term game, so kind of when people, from the time they go into the system to the time they leave the system, 60, 70 years. And so we're only looking back, so that the Commission reported in 2005, so it's only 14 years ago that they reported, but the fact that we have just completed kind of putting in the major proposal from the Commission of Automatic Enrolment, and there's still cross-party consensus about the way it operates, I think is almost unheard of in pension terms. So 14 years is a long time in pensions policy, and so for us to still be working to basically the same template and the same policy that the Commission proposed is I think a really good indicator of how strong that consensus was.
What do you think was about this particular commission that made a consensus happen?
There were a number of different features, and I have to say that it wasn't always evident that they would reach that consensus. Okay. It wasn't an easy process going through kind of 2003 to 2005. There was a kind of wide range of views and some concerns, I think, about the direction or the way that the Commission was operating. But I think what made it work were firstly the individuals concern themselves in the Commission, and I think actually it was really important that you had that right mix of expertise and characteristics between Lord Turner, as he is now, Baroness Drake and John Hills. I think they had the right credibility with the stakeholders. They are all very rigorously evidence-based, and I think that really helps. And I think the way in which they went about, as we've just talked about, building up that consensus around the objectives first before even starting to contemplate what the right solutions were, I think really helped people to at least get behind the idea of the Commission and the way it was going to operate. I think they spent a lot of time working with all the stakeholders to try and find out what they wanted and to try and help educate them as well. I mean, one of the things often forgotten about the Commission was that before the Pensions Commission, the official view of all political parties was there would never be any further increases in state pension age. Yeah. So by the time the Commission had reported, it was pretty widely accepted that state pension ages would be going up, and that's only over a relatively short period of time, and that was purely by weight of evidence and by explaining the situation. So that the way in which they worked was quite an important way in determining that they could build up that consensus and that it would last.
Can you remember any of the concerns around the Commission?
Initially, the main concerns were that actually there wasn't enough consideration being given to state pensions in the terms of reference of the Commission. At the PPI, we'd done work as soon as we started to try and understand what the landscape was, and we identified the bigger problem was actually with the state pension rather than the private pension system, because it didn't provide a foundation for any private pension system to operate on. So we had a strong feeling that actually you needed a better state pension foundation before any private pension reform had a chance of working. But that's where over the period of time between 2003 and 2005, the Commission actually took that on board. So I think in some of the evidence sessions that we had with them, the Commission were very focused at that stage on kind of what's the private sector responses here, whereas we were trying to suggest that actually the private sector responses needed to come after you'd done state pension reform. So what the Commission did well was that they didn't have a specific proposal necessarily for state pension reform, but had put in place some objectives and a long-term goal for where they felt the system needed to go in order for their recommendations to work. So I think being able to do that actually increased the level of consensus again and help people to buy into what the solution was.
Do you think that this consensus has been maintained, considering, for example, 2014 pension freedoms reform?
Yeah.
What do you think about this?
It's difficult. I don't think that the Commission, when it was reporting, had any idea that there would be any real change in that area. And I think the 2014 changes, when they came in 2015, have actually, they're quite a fundamental challenge to the way that we think about the pension system. For the Pensions Commission, it was very clear that the purpose of the voluntary, as it still remains, although with a kind of soft compulsory element, pension system was to allow people to save to provide themselves with an income in retirement. And in fact, the whole way they judged the success of their system was by looking at a replacement rate, so how much income people had when they stopped working compared to how much they had when they were working. The way we now think about retirement and income in retirement is not just income in retirement, it's assets in retirement. And the kind of fundamental challenge now is that the system is just starting to evolve around how to enable people to have the assets to live in retirement, but giving them choice and flexibility over how they use those assets. I still don't think there's necessarily a consensus around that particular element, and I think there are still major challenges. We don't really know how well that will work in future. We know how it's going so far, but the people who have been through the system aren't really typical of the people who are going to be coming through the system later on. Lots of people still have income from the state pension and from defined benefit schemes, and so their defined contribution decisions aren't as important yet as they will be in the future. And the work we've done at the PPI has highlighted there are a lot of gaps in the way that which individuals approach the system, how they understand the system, how comfortable they feel in the new system. And so there's still a lot of work to be done to make sure the system works well for them in the future. So I guess there are still elements of difference of opinion around those, as there are around the majority of bits in the wider pension system. But I think the key framework, which came out of the Commission's report, so the kind of stable, stronger foundation delivered by the state, which is less reliant on means testing, I think there's still pretty strong consensus around that. The question as to how high it is and how it's indexed is starting to get a more political discussion, and there may be some changes around that in the future, but not at the moment. And automatic enrolment and state pension age increases are the other two key planks of the Commission's recommendations, are still, I think, subject to cross-party consensus. Again, the state pension age one, there are differences around the edges, and I think that's partly to do with the changes in life expectancy which have come through since the Commission, that has meant that there's now more divergence in life expectancy, whereas the Commission was expecting there to be convergence in the distribution of life expectancies going forward. But the bit that still has the most consensus around it, I think, is automatic enrolment. And I was part of the automatic enrolment review in 2017, one of the co-chairs of the advisory board, and it was really instructive how all the way through that process and after the recommendations were made, very little political discussion about any of the recommendations or any of the operating of the system. There are still views amongst different parts of the industry as to whether automatic enrolment has gone far enough, but I don't think there's anyone who's really doubting that the actual structure of automatic enrolment is the right one for the UK going forward.
Why do you think there is solid consensus on automatic enrolment?
I think because the evidence base which the Commission put forward made it clear that we needed something. And that a purely voluntary system without this element of automatic enrolment or compulsion was not going to deliver enough. And I think that's now kind of broadly accepted. And I think it's because the alternatives have difficulties with them. So the obvious alternative to automatic enrolment will be compulsion. There are still advocates, especially those with experience of the Australian system, who think that compulsion is a better way of dealing with it. But there are particular vagaries in the UK system around, in particular around things like earnings distributions and labour market experience, allied to the new levels of the new state pension, which mean that actually it's very difficult to select a single level of contribution which would be right for everybody in every circumstance. So having that kind of safety valve, if you like, or escape mechanism of automatic enrolment means that you don't always, or that it's potentially a better fit for most of for all of the population rather than different individuals within it. So actually, a compulsory system doesn't have the same flexibility as you get with automatic enrolment, I think.
Do you think that the hard compulsion of automatic enrolment is unfit to the UK welfare state?
Yeah, it could do, but I think it would have challenges. So I think that there are still concerns that, especially given some of the economic circumstances people are in at the moment, that saving is not always the right thing for everybody. And automatic enrolment, we have to bear in mind, doesn't cover everybody in the workforce. Only those earning above £10,000 are automatically enrolled. It doesn't cover all income at the moment. We're hoping it will do. One of the recommendations of the automatic enrolment review was to cut from the first pound rather than from about £6,500 as it is now. I think the bigger problem with compulsion is almost a political issue. It's because this was something that was, I think, very apparent at the time, kind of in the early 2000s, but may not, but I think probably is still true today, that compulsion is seen as similar to taxation. So actually, if you have a compulsory system, you could either do it through the state or you could do it through a private pension system, but both of it means that people have no choice over where that money that money is taken from them. And the argument against compulsion that was around at the time of the Commission, and I think would still hold now, is that people see it as a bit like taxation, and the UK is still on a trajectory of lower taxation rather than higher taxation, as the most popular opinion amongst the population, I think. So as soon as any political party recommended compulsion, I think they'd find it very, very, very challenging. It's very easy to portray that as a tax, even if it's not. It's still owned by the individual in the same way that automatic enrolment pensions are owned by individuals. But I think just having that option of choice, even if people don't make choices, and we know that automatic enrolment has been very reliant on inertia, and very few people have changed from the defaults. Just being able to do that actually makes it more palatable than if you're told you have to do it and you have no choice.
Can you go back when there was the proposal of automatic enrollment? What were the views before it was implemented?
There was still uncertainty. I think the actual process of the implementation of automatic enrolment was fairly tortuous. So it took quite a long time from when the recommendations were made before it actually started. I think the precise design of automatic enrolment was difficult, and I think because it was being implemented afresh, and there were lots of concerns, and not everything else had happened. So you have to remember, when automatic enrolment was being put through in legislation, there'd been no real changes to the state pension system. There were some things to make it slightly better coverage, but it was still at a relatively low level. It wasn't the single tier pension that we have now, or the new shape as part of that. So there were still concerns over who should and shouldn't be saving, even more so back in those days. So that led to, I think, some of the design we have around only being applicable to people earning over more than £10,000, to not having contributions from the first pound. Some of these, what now seem to be complications in the system, I think came about because automatic enrolment came in before the other changes that were being made. And so that did mean that there was a lot of uncertainty as to how well it was going to work. Firstly, the more complex it's made, the harder it is to administer, and it was not clear how small companies who up until that point had no interest and no interaction with pension saving at all would be able to cope with that. And I think there was still a lot of uncertainty as to how powerful inertia would be. So, for example, when we looked internationally at other systems, and fortunately for us, New Zealand had just started to implement them, that they copied the idea from the Pensions Commission but introduced it much more quickly, because they're a much smaller economy and able to do that. So there was some evidence there that we could look at coming through. But everything we looked at seemed to suggest that the opt-outs would be higher than 10%. And so we had a range of different options. I think the very best we thought it could be was 15, going up as high as 30, and probably expecting it to be somewhere between 20 and 25%. And at that level, you start to think, so who is it who's opting out, and what impact does that have on incomes in retirement? So it wasn't a foregone conclusion that it was definitely going to work. And so there was a lot of interest into what the experience was going to be as soon as it came in. Even when it was introduced, though, right the way through, there's always been, oh yeah, it's going really well, but you'd expect it because it's the larger companies that already have pension schemes going first. It'll be different when you get to the medium-sized companies that don't have schemes, and then but they've got HR departments and they can operate it properly. It'll be different when you get to the really small schemes, and then it's really different when you get to the people who are kind of self-employed and have one member of staff. But actually, it's been pretty consistent right the way through, and I think partly through design, partly by accident. I think.
By accident?
In the phasing and staging has worked really well. I'm not sure it was necessarily designed with that in mind, but it has worked in the way that it's actually been implemented. And I think that's all you can hope for, really.
The phases from the big employers to the small ones helped a lot to make it successful.
Yeah, I think it did. But I think what's interesting is that there were a couple of changes to those timetables as they went through, which I don't think were anything to do with trying to ensure the success of automatic enrolment. It was more to kind of give more breathing space for other reasons to different sized companies, and to, in some instances, in the increase in contributions, also to reduce the cost of the government of things like tax relief. So they wanted saving to increase, but not necessarily so rapidly that there was a cost to government in doing that. So that's my interpretation of what's happened. That might not be the interpretation of the government departments and the people who are implementing the policies, but things happened for a number of reasons, but whatever the reason was, this actually worked out pretty well.
Can you see any positive outcomes from the establishment of a state workplace pension provider?
Yes, no, definitely. And again, Nest is something which was seen as really necessary at the time.
The pensions industry was not so happy.
Yeah, no, I think it was always a difficult decision. I think that the government, I think rightly, had a concern that the pensions industry back in 2008 or whatever it was not really set up to deal with a large increase in the numbers of savers who would potentially be in relatively small amounts of money. They'd never historically been the target market for the insurance industry and the pension providers. There were one or two notable exceptions, but they were very industry specific. So, for example, B&CE had a stakeholder pension which was designed for flexible workforces in the building and civil engineering industry. So they actually were working in a low-cost, fragmented market in exactly the same way as the rest of automatic enrolment would, but they weren't open to everybody. And so the concern was that there wouldn't be enough capacity within the existing industry to cope with, firstly, the very large number of employers who would need to start operating automatic enrolment and find schemes to operate them. So I think it's something like 1.4 million employers, which is a very big increase on the ones that were currently operating. And the individuals in some of those employers just would not be attractive to the industry. And so the offerings that they would get might actually not be that good or beneficial for them. So there was a feeling that they needed, firstly, a kind of a provider who would have, as part of its terms and conditions, having to take any employer who wanted to go to them. So if they couldn't find anywhere else, there was always somewhere where they could open up a pension scheme for their staff, and where they could actually target what they wanted on people who are likely to be in there. So they could actually design a scheme that would work for the people who weren't as attractive to the rest of the market. So I think it was a really important element to do that. What actually happened was that the creation of Nest actually changed the market in itself. And so B&CE, for example, expanded, created a new pension scheme, master trust as it is now, called the People's Pension, which was based on what it already had done, but open to everybody. It attracted schemes from overseas, so like now pensions based on the Danish pension system came in, because there were other alternatives rather than those that formed the main part of the market, who were then attracted by this new market of automatic enrolment coming in. But still, Nest had an impact on the way that those schemes looked, the way that they operated, and I think in the long term what the outcomes for individuals are going to be, because it kind of helped kind of almost set a precedent for how schemes would have to operate in order to be part of that market.
Do you think that the consensus on the creation of Nest was achieved because specific features were dictated, like it should be a DC scheme, or like any other scheme, or it should be excluded from the annuity market? So
There's a number of different issues, I guess, and the consensus around Nest is probably not as strong as the consensus around automatic enrolment.
Okay.
I think there was definitely consensus that something needed to be set up. I think you can see that the consensus then around what it should do was probably not there in the same way, and I think it's worth splitting that down. There was a political consensus that there should be an operation. I think with the industry there was real concerns that this would end up not just serving the part of the market the industry didn't serve, but actually taking over the entire market.
I see.
And they were concerned mainly because it appeared, and does appear to some, that Nest has a competitive advantage because it is underwritten by a loan from the government which is being paid back over a very long period of time. And so that led to a lot of restrictions being placed on Nest initially. So people couldn't transfer in and you couldn't transfer out, so you couldn't take existing schemes wholly into Nest to try and protect the existing market, although that restriction has since been lifted. But as you say, there's been a lot of work within Nest about looking at how they can help their members as they move into retirement now as a result of the freedom and choice reforms in 2014. And again, there is a lot of concern amongst the industry that Nest would have an unfair advantage in being able to do this because it doesn't have the same competitive capital requirements that market players would have in doing that. So I think what that they would argue is Nest have got time and scope to develop this because they're not having to raise capital in the markets because they're using a loan and would end up just paying it back at a different rate. And there's a real tension there because there's a market issue, and I think there is some merit in the argument that Nest are able to do things more easily because they don't have the same competitive pressures that other providers might have. Mm-hmm. But at the same time, if you're looking at it from a consumer perspective, it's not clear that the market would operate in as efficient or timely manner as Nest might be able to do in providing or leading with solutions that are in the interest of consumers. Mm-hmm. So it's quite a tricky policy issue, one which at the moment the government has come down on the competition side and said actually Nest shouldn't be able to do this, but I'm sure it's one that will be revisited at some point in the future, especially when more Nest members get to the stage where they need to be doing something and they need a solution that works for them.
Mm-hmm. Nest is supposed to repay the loan.
It's not something that at the PPI we've looked at in much detail. It's an issue for the industry, and I don't think they're concerned that the loan will never be repaid. I just think that the terms of the loan are probably more advantageous than would be possible to get in the private market without the same restrictions on them. And so there's a kind of feeling that Nest are able to do things more cheaply, and that can affect competition as a part of doing that. But it's difficult. I mean, the role that we play is in trying to look across all of the different perspectives, and so that is not just at looking at how the market is working, but how outcomes are being affected for individuals. And it's not a straightforward piece, because it could be that if Nest operates in one particular area, it might bring forward solutions for a particular group, but it might actually mean that there are different solutions or a longer time for solutions to appear for another group. Mm-hmm. So it's trying to think about how it all works together is actually quite tricky.
What do you think about the use of this discipline of behavioral economics in policy? And if you think that it works in the case of pensions, and if you want to bring also other examples?
Yeah, I think it's very, very helpful. Policy is really about getting people in a better place. That's the whole reason we do policy, is to improve outcomes for them in one way or another, either to keep them healthy, to protect them, to give them money in retirement, all these kinds of things. Policy is there to improve lives. It's much easier to improve someone's life if you work with the way they would naturally operate anyway. And the big benefit of automatic enrolment is this inertia and this nudge that it's completely flipped the equation, that if they now do nothing, they end up doing what's in their best interest, rather than if they do nothing, they ended up losing out. So that's really important. I think the behavioural element is still not as fully implemented in all policy thinking as it should be. Mm-hmm. One of the examples we've talked about already is the freedom and choice, where the big selling point of that policy is giving people choice about what to do, where we've already established that actually choice is a really bad thing. Not for everybody, but for some people, because it's a complicated choice, it's something they don't have experience of, it's a really important, in some cases, one-off decision which can affect the rest of their lives, and they are not equipped to make that choice. Even if they feel really happy doing it, you're not going to know for 5, 10, 15, 20 years whether it's worked out for them, and by that stage it's too late. That doesn't mean that the policy itself cannot work, but it means you need to support the policy and think very carefully about how these decisions are framed, what the default options are, if you like, what happens if people can't make decisions, what's there for people who actually don't want to make decisions. So I think it doesn't mean that you can't give choice, but I think it means that you need to think carefully about how choice operates. And I think there's so much we can learn from behavioural economics, behavioural science, any behavioural response work, to try and actually make it easier for people to do the right thing rather than leaving them to their own devices. We quite often hear that if you just give people enough information, they'll end up doing what's right for them, and we have no real evidence that works.
And if somebody comes to you and say, okay, but for example, I was watching on the TV 1 week ago that there was a person saying, "Oh, I'm saving for my future and I don't even know."
Yeah.
So, what do you think about this and the role of behavioral economics?
I mean, that depends who they are. Yeah. During their career, during their life stages, I think for a large part of people early in their life, that's absolutely fine. Saving for their retirement and not even knowing about it is great, because if they did know about it, they'd be tempted to do something else. I think what we can't do is have that situation, that state, remaining with that individual right the way through until they get to the stage where they have to do something with their money, which is the kind of freedom and choice point. So I don't see any problem with people not knowing they're saving when it's not important for them to know. I think when it gets to maybe mid-ish, maybe early mid now, given where state pension ages might go, but kind of people in their 30s, 40s, when they're making other financial decisions, when they're starting families, when they're moving houses, those kind of things, that's when people need to be aware that they are or have been pension saving, and that pension saving is a good thing, and what their pension saving will mean for them going forward. So it's about engaging people at the right time, in the right way, with the right decisions. But there are certainly large parts of the population that at any particular point in time don't need to be engaged with their pension saving. That means the system has to get the right balance between what happens by default through automatic enrolment and what individuals are still expected to do on top. And I think we've still got work to do to work out where that right balance is. But I don't think anyone is claiming that automatic enrolment by itself is all you need. But I think automatic enrolment makes it so much easier to construct something else, to make it easier for you to get closer to what people might need.
By introducing the single-tier pension, it means that the earnings-related state pension as a provision has been abolished.
Yep.
So why do you think this was accepted?
I think the main reasons were two, I think. So one is affordability. Mm-hmm. So looking far enough forward, the earnings-related pension, if it was to be kept in any meaningful way, would become really expensive. And in a world where the trend is very much on reducing expenditure on pensions going forward, that would have kind of sent the UK in the wrong direction compared to where it had been going. And I think the second was an acknowledgement that the role of the state needs to be specified and managed. So if you have an earnings-related pension, the state is performing two roles. It's kind of doing the basic poverty avoidance, which is the role of pension systems worldwide. As a very minimum, you want a system which keeps people alive and out of poverty going forward. But the state was then also acting as an earnings replacement. And although that is used in many systems around the world, it's starting to be used much less, because it is proving to be very expensive. And so I think there was an acknowledgement that the state should focus on what it could do, but then should do that well. And so that meant, I think, making the state pension more generous than it had been historically and how it had been kind of reducing over time, removing the means-tested element to it, and that was a really important part in the kind of interaction with automatic enrolment and private pension saving. One of the big debates that we had just after the time of the Pensions Commission, and we at the PPI had about an 18-month discussion with the Department for Work and Pensions about whether actually many people being automatically enrolled would see the benefit of that saving if there was still such a big gap between what the basic state pension was likely to deliver and the means testing levels they were getting, which was growing at that particular time. So actually removing that trap became an important part of actually being or helping automatic enrolment be successful, but also making sure that the level of pension people could expect would be enough to take them out of poverty, because again, historically we've had the means testing system to keep people out of poverty, and the use of the basic state pension, the purpose of the basic state pension had kind of got lost, I think, over time. It wasn't really clear what it was there for. And so now that, I think, has been kind of not quite reinvented, but repurposed as being the state's role is purely now about poverty prevention and making sure that people who are participating throughout their working life actually get a level of pension in retirement which is going to get them, if not above poverty lines, very, very close to them.
For means testing. Mm-hmm. So in this context, I would like to ask you how you would comment on the argument that triple lock or both triple lock and double lock have to go.
I think the discussion is really short-term and long-term.
Okay.
Long-term, of course, it has to go. You cannot have a system which increases on average relative to earnings over time compared to the rest of the population because it's unbalanced. I think the bigger question is, what would you replace the triple lock or the double lock with, and when would you do it? And I think to answer that, you need to go back a stage further again as to what is the purpose of the state pension and what is the appropriate level of the state pension. So even now, I think we're still not back at, as a proportion of national average earnings, the equivalent of the basic state pension in 1977, I think. So the level of state pension provision had fallen so far that even with the big increases we've seen relative to earnings in recent years, the kind of 7 years, 8 years, 9 years of the triple lock, we're still not at that kind of level yet. And the level of the new state pension internationally is still very low. Now that doesn't mean that it's not the right level, but I think it means you need to consider that. You need to consider what is coming from the state, from the private pension system, and when, because don't forget, automatic enrolment, although it's been around since 2012, we only finished the implementation programme last month.
Yeah, exactly.
And it's going to take decades before larger sums of money start to come through from there. So what's the right balance between the state and the private sector in doing that? And I think I think forward-looking, it's a question of what's that balance and where should it be? And you should almost be saying, okay, where do we want the state pension to be? And then the triple lock is just a mechanism for getting there or not, depending on how far away you think you are or not. I think the other factor is, though, that although there's a lot of discussion about the kind of average income of pensioners and how pensioners as a cohort and the average income across the group as a whole is now higher than the working age population, how it's been changing, that ignores a lot of the dynamics within that population. And actually people who go into retirement poor generally stay poor during retirement, and most of the change in the poverty figures for pensioners has not been driven by the triple lock. It's been driven by increases in people working in retirement and increases in the average amount of private pension, which is to do with younger pensioners coming in with higher amounts of private pension. So actually, if you look at individuals within that group and how their incomes have changed over time, they're not seeing really strong levels of growth. It's probably stronger than in the working age population, but then the working age population has been potentially artificially lowered for the last 10 years or so, and so it's not likely that would always be the case.
So why there is the argument, if the triple lock or the double lock go, then this will restore to an extent intergenerational equity between the working age population, where benefits have been cut,
Yep.
and the pensioners.
Yeah, it depends how you define intergenerational equity. And I think that if you talk about how much money is spent now on the different generations, then there's an argument for that. You can see that kind of on the face of it, it looks unusual for one particular group to be protected in terms of benefits and one not to be protected. Although you can argue that the group that's been protected have no choice. They will never leave retirement in that sense. They will always be there. The people who are on the working age benefits, it may be a temporary state for them and they may be able to get back. So there are differences between them, but you can see why people would argue for 10 years now we've been protecting pensioner benefits, but we've not been protecting people of working age. Is that the right way to use the resources we have now? Mm-hmm. I think the mistake that people often make about the kind of longer term intergenerational equity is assuming that if you end the triple lock now, that's beneficial for younger people in the future, because it isn't. It just means it's just a change in it's a different distribution of resources that they're going to need. So we did a really important piece of work, 2013 I think it was, which looked at what the range of outcomes would be for individuals if all they did was save the minimum in automatic enrolment. So the real purpose of this work was to look at, is the minimum contribution enough to give people an adequate retirement income? But what we did as part of that is, because there was uncertainty about the future of the state pension, was to use either an earnings-linked state pension or a triple-locked state pension. And actually, whether we used an earnings-linked or triple-locked made the biggest difference to individuals retiring in 50 years rather than the contribution level. So if we remove the triple lock in 2020. I think actually when we did the work, we assumed we removed it in 2016. Then an individual entering the labour market at that point and going through the whole system in automatic enrolment would need to save 4% of band earnings more to replace the triple lock. So what that means is, instead of paying higher national insurance contributions now to pay for the triple lock, they'll end up paying lower national insurance contributions but needing to make higher individual pension contributions themselves right the way through their life to replace what they're not going to be getting from the state in the future. So
That's
the working age population needs to pay more to support themselves in retirement because there's less coming from the state. So it's more a balance between state and private provision and the method in which it's delivered rather than necessarily an intergenerational transfer in one sense or another.
I would like to ask you if you can think of other areas of welfare whose reform has not been successful.
One of which we've been working recently is around universal credit, but that may be the implementation for a whole host of different reasons. I think maybe driving the kind of difficulty in that area. The one area that just has not been reformed or looked at, or where there's no real consensus or even strong leading candidates for reform, is social care. And it's often said that what we need is a pensions commission for social care, but I'm not sure if it would work in the same way. I don't know.
Okay.
I think it would depend very much on the individuals involved, and as I said, I think the combination of the three commissioners on the Pensions Commission really made that work. If you put three different people there, it may not have had the same outcome. So I think who you have running it is really important. And I think that there was already starting to be an acceptance around the pension system needed to be sorted out and needed to be reformed. And it probably wasn't as politically charged as social care has been. Social care in 2 of the last 3 general elections has been a really major political point. Interestingly, the reforms put forward which have caused the political concern have been quite similar, one put forward by the Labour Party and one by the Conservative Party. But anything which kind of is in advance of people knowing that social care is a problem is going to be difficult. And I still don't think there's a widespread public acceptance that social care is a big enough problem for there to be a radical solution to it. And I think the problem is whatever the radical solution is going to cost individuals more money, one way or another. And that's a really difficult political circle to try and square. The only way to do it is probably to try and get consensus, but I'm not sure that the political parties are in a place where they want to find consensus yet.
Do you think that this consensus cannot be achieved for social care because social care recipients are a different electorate?
It's less certain and probably less selective. I mean, I think social care can be required by virtually anyone. But it's not required by everyone. I think that's part of the problem. If we think it's hard enough to get people to think about their retirement, which in some circumstances can be quite a pleasant thing to think about, not having to work, not needing to go to a job that you may not like as much, having more leisure time and free time, and hopefully the aim of all of the pension system is to build up enough money for people to enjoy that. Actually, social care is even more frightening. It's about the last 2 years of life, potentially. It's about not necessarily being able to live in your own home. It's about being alone, lonely, taken out, needing medical help, all these kinds of things which people really do not want to think about.
I would like to ask you before we stop, if you would like to add anything else. I don't know if my questions have captured your views on the.
No, I think so. No, I mean, just so it's remarkable how well the Pensions Commission recommendations have stood the test of time. Even just this week, there was a parliamentary reception to celebrate the success of automatic enrolment. Now that's the first ever event that I've seen celebrating a success of a policy in welfare, and especially one which, kind of as we say, the genesis of which came 14 years ago, and basically the structure is the same now as was suggested then, and that is incredibly rare, and I think a real testament to the kind of the amount of work and the evidence base. Not to underestimate it, the amount of work that went into building that consensus. Having a great idea is only part of the problem. Getting other people to sign up to that idea and to remain signed up to that idea is just as hard. And I think the attention to doing both of those things is probably what's given the Commission this longevity. In an area where ideas can change very rapidly, and there's always a new idea as to this might be a better way to do something, to actually keep this framework intact is very, very rare.